Hello and welcome to Trade Maestro. Thank you for joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just followed their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's comprehensive. And it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning, good afternoon, good midday, wherever you are. Welcome to another episode of Building Blockchains. Hope you're doing fantastic today. I am your host, Jeremy Whaley, and it's great to be with you. I think we got a great show coming up today. Got some great news happening here. We're going to share that coming up here in just a moment. Of course, we're going to do some market updates. We're going to talk about how XRP has taken over the stock exchange with their ETFs, their exchange-traded funds. Then we're going to talk about a unique opportunity that crypto has presented in terms of the heat market. I think that's going to be a pretty fascinating story for you to look at. And then I got a couple segments to share with you. Maybe the most controversial to date, why Bitcoin is superior to gold. Yes, I said it. And if you told me 10 years ago I would be saying that today, I probably would have called you crazy, but I am here. I'm saying it. Bitcoin superior to gold. We're going to talk about that today. And then we're going to wrap it up with a discussion on what I refer to as the 5 disciplines of trade analysis. It's a power-packed show. You are going to get a lot of really, I think, really awesome information out of it. With no further ado, let's take a look at the market. Well, that was a fantastic crypto news little segment to lead us in there. Unfortunately, we were supposed to be looking at this one. You see, when you are your own producer, sometimes you push your buttons wrong and the wrong piece of video clip rolls in there. And I'm still trying to figure this out and kind of figure out the format for what we want to do. And yada, yada. But thank you for being patient. And hey, we laugh together, right? We enjoy it all together. Take a look at this, folks. You ready? Yesterday it was an ocean of red. Today it's like a Christmas tree. It's an ocean of green. Everything is up across the board. Bitcoin's up 1,000 points, 93,186. We got Ethereum up 4.1%. Solana, ladies and gentlemen, all the way to 141. That's one of my favorite ones right there. XRP is up 3%. XLM's up 4%. I think I said it yesterday, buying at 24 cents, right? We bounced overnight. And then Cardano up 2.5%. So lots of great things are happening in terms of the momentum shift. Let's take a look at some of the charts and I'll show you exactly what I'm looking at. And I mentioned overnight. I can't remember if it was like just after midnight or if it was when I first woke up this morning. But the last time I looked at this chart before I was getting ready for this an hour ago, this candlestick that you see right here was looking very, very red. In fact, it looked the opposite of a Christmas tree. It looked a little more hellish. It was completely red, like blood red. And it looked very, very, very bearish. And then here we are just a few hours later, and you see that it doesn't look red anymore. Instead, it is not only green, but it's got that long candlestick shadow in there. And yesterday we talked about candlesticks. Just how appropriate is that, right? A day later, we have a great learning opportunity. I mentioned yesterday, if you remember, and I'm going to refresh you right now, I mentioned that in order for this candlestick to get created with that long candlestick shadow, remember, in this case, it's a green candle. So that is the opening price of the day. So at one point it looked like this, and then it actually traded all the way down to this low point right here. So at one point today, And again, I can't remember if it was last night before I went to bed or if it was this morning when I woke up. But I looked at this and it looked like that. It was very, very bearish. And I'm looking at this. We're sub 90,000. We're actually like around 88,000 and change. And I was like, oh, well, we're going to have to be looking at what's our next support levels. And then a few hours later, I come back and instead the bulls have come back in, left us with this long lower candlestick shadow, and they've pushed us back up towards our pivot area right here. And that's how you end up with this candlestick that you're seeing right now. Now, you'll notice that it's kind of hollow. I've slightly shaded it green, but it's mostly a hollow candle, so it looks kind of black because it's on a black background. But that is a bullish candle. More importantly, the location. If you remember yesterday when we talked about candlesticks, I talked about how the location is the most important thing. This is in the right location. To have that candlestick with that lower candlestick shadow at a support level, which is what we've got, that is a good sign. And whenever you pair that up with signals such as our stochastics being as oversold as it is, such as our fear-greed index, like we talked about yesterday, being as extreme as it is, that's actually a good sign. And as I zoom out, and you see this trend, you remind yourself of this trend that we've got on Bitcoin. This is actually, of course, the perfect location for that candlestick formation to show up. Not only that, let me go a little step further. I mentioned yesterday that there's certain candle formations that happen together, that when they happen together, it creates a pattern, something we call a pattern, a multiple candlestick formation. And if this day closed right like it is right now, which we're not there yet, but we're getting close, that 2-day candlestick formation right there is something we call a bullish harami. And that is a bullish reversal signal. And it's all happening at support, which is the right location for that. So I told you I'm pretty optimistic still about crypto. I'm not buying into this bearish narrative. In fact, it's quite the opposite. I'm thinking that we're very extreme in the wrong direction right now. And I think we're about to see some bouncing coming in. So that's the good news as far as Bitcoin's concerned. Let's take a look over here. I don't want to hit all of these. Well, actually, I do want to hit Ethereum really fast. From a candlestick pattern standpoint, I want to show you this one because we talked about it yesterday. I want to show you this 2-day pattern. If this day closes like this, if the candles don't change, that is what we call a bullish engulfing formation. And that is happening on Ethereum right now at a support level. That's exactly where you want to see it occur. It's in the right location. So I think we are coming very, very quickly into the bottom of this pullback across the board. XRP, same thing. We got another bullish engulfing formation there. XLM, I want to talk about this one. I got to confess, I did buy some more XLM. I'm also going to confess that I did not do what I told everybody else to do. I told everybody, hey, I said something to this effect. It would be smart to put a limit order to buy at 24 cents. And I didn't do it. I did not do it. And yet, had I done it, I would have been picking up XLM at 24 cents because that candlestick right there, if you hover over it, which I will do briefly right now, if you can, oh, wrong key command, Jeremy. Oh, stop moving, stop. What did I do? Stop. There we go. Sometimes the computer just doesn't do what I want it to do. If you hover over that, you will notice that the bottom of the day was exactly 24 cents. I could have picked some up. Instead, I ended up putting a market order in around 25 cents. So I paid a penny more, but I picked up some more XLM right there because I think it's a great price. I genuinely do. I'm a big believer in this project, and we are pretty much at the support level. Now, it could push down lower. Would I pick up some more at 23 cents? I think it would be great if it dropped to 23 cents and we could get some more. I probably won't. I think I have as much invested right now as I want to do. But this is a great location. Great location to be buying some XLM. Solana is bouncing. I told you a week ago if we could get some in the 130s, it'd be a pretty good deal. Well, that deal may have passed because we're back up to 141. And if you look at all these, how many I looked at, 5 or 6 of these crypto charts right now, very bullish candlestick formations, all at support. This is a good sign. This is exactly what you want to see when you're looking for a bottom. So is it a guarantee? No, there's no guarantees, but it's definitely moving in the right direction, which is, again, exactly what we want to see in this circumstance and in this situation. So with no further ado, now it's time for our crypto news segment. I think. And there we go. Played the right video at the right time. In the news today, we got some interesting stuff going on. Take a look at, we're not going to look at the Fear Greed Index today. We did that yesterday, but this is a big story. Last week, I shared with you that Canary issued their first ETF with XRP. Again, if you're not familiar with the term ETF, it stands for Exchange Traded Fund. It's just simply an investment fund that trades on the stock exchange as if it's a stock. And they did their first one for XRP last week. It came out with fantastic cash flow. I think it was $58 million in the first day. Maybe it was in the first week. I can't remember, but it was great cash flow moving into that fund. What I did not realize is this headline was about to come out today. I knew that there were several. See if I can make it any bigger. I knew there were several funds that were going to be releasing XRP ETFs, but I didn't realize how many. So today, the Franklin Templeton Fund is launching. And you'll notice, forget the Maxi Doge. That's just another thing they're presenting here. But if you read the article, this is on Crypto One's. That's not One's. What is that? DNES? I don't know what that is. Crypto-ness. One of those weird names. But anyway, I was talking about the Franklin Templeton's releasing their ETF today. And the ticker for that, I saw it. I was going to share it with you. It is right here. EZRP. EZRP. Let's see if I can write that up here. EZRP. Okay, so Easy Ripple, basically. That is the new Franklin Templeton ETF. Is there a benefit between a Canary ETF and a Franklin Templeton one? Not really. A bunch of these investment houses will publish, identical ETFs. And basically the one that gets the most volume is usually the one that you want to trade. But they're pretty much going to do the exact same thing. Anyway, so they've got theirs released. The one I did not realize, or I was going to say what I did not realize, is how many companies are releasing XRP ETFs. This I did not realize. Franklin Templeton's doing theirs today. Bitwise is doing one, 21 shares, Coin Shares, Grayscale, and Wisdom Tree. So 1, 2, 3, 4, 5 new ETFs coming out in the next week for XRP. With Franklin Templeton and Canary last week, that gives us 7 ETFs to choose from to trade Ripple, XRP, on the U.S. stock exchange. Interesting. I thought that was a pretty interesting story. You can check it out if you really want to, but that's the highlights. Moving right along, I wanted to highlight again how the news media is crafting the narrative that they want to craft. Bitcoin prices falling below 90,000, why a crypto recovery might not come soon. And yet, you guys realize that this is a BS story. It was updated at 9 o'clock this morning. Whenever I looked this up, it said it was 4 hours old and the market had already turned. Everything was already back to green by the time I saw this. What a terrible headline. Why do the news headlines do this? I don't know. They just want to instill fear. And I just wanted to highlight that. Like, what a BS headline. Just because you see the headline and it stirs fear, don't fall for it. All right, here's the next one. This is a fascinating story that I really had never thought of. I mean, I've been saying for years, blockchain and crypto provides opportunities that we never would have dreamed of. It's innovation we never could have imagined. This is one I really never imagined. If you're not familiar with crypto mining, it creates a lot of heat. Whenever you mine Bitcoin or if you mine Litecoin or another coin, it creates a lot of heat. I tried it once. I tried putting a miner on my laptop. I had a brand new laptop, super, super fast. I was like, oh, I'm going to mine some crypto. And that thing was so hot, I could barely touch it. And that was in only 12 hours. And I didn't mine enough to make it even worth it. That's the way most of these mining setups are, especially if you try to do it at home. But yeah, this is pretty interesting. Check it out. So entrepreneurs racing to repurpose and capitalize on heat that is wasted in cryptocurrency mining. And here's what they're doing. Bitcoin mining generates enough heat annually. This is interesting. For Finland's heat needs. There's enough heat generated from Bitcoin that we could heat all of Finland. And Finland is like next to the North Pole. I mean, it's like the Arctic Circle. It's freaking cold. They generate hockey players up there. It's so cold. Okay. But most of it just goes up into the air. And that led to a recent innovations like a $900 space heater that doubles as a Bitcoin mining rig. Mind blown. What an awesome idea. What if in the future, instead of having propane natural gas heaters that, heat our homes, that's what we have where I live. I live in Middle Tennessee. You can also do an electric heater in Middle Tennessee, but for the most part, most people have natural gas. And I know different parts of the country have different heating sources, but instead of having natural gas and a natural gas bill, what if we were to have heating units that ran on electricity but generated heat by mining cryptocurrency? Whoa! What if our heating bill could actually become a heating payment? We'd be like, how hot can we make the house? Like, let's warm this sucker up. That is brilliant, especially in a cold environment such as Finland, such as Canada, the northern areas. But here's a picture of it. I thought this was absolutely brilliant. And it's brilliant enough that I'm going to investigate if there's even a way that we can invest in developing that technology further. That is brilliant. And it's one of those many, many ways, many areas where innovation, in this case, cryptocurrency and mining, leads to a secondary benefit. I think it's an awesome story. Let me know what you think. Tell me in the comments down below. Anyway, that is my news headlines for today. Let me know what you think about them. And with no further ado, let's have that really powerful conversation. What is the deal with Bitcoin? Is it really more valuable than gold? Well, maybe with that story right there, what if Bitcoin became your heating source? Would it be more valuable than gold? Maybe. Let's talk about that. You've heard that Bitcoin is digital gold. I've heard Bitcoin's digital gold. It's not. I mean, gold is gold colored and it's shiny and it's been around for millions of years or hundreds of years. And, some people call it God's money because God created it and put it in the earth and we can mine it, we can take it out and we can use it as a medium of exchange, right? So gold and silver, they have a certain intrinsic value built into them. But some people are saying that, Bitcoin is the new gold. And I'm going to make an argument today why Bitcoin, in my opinion, today in 2025 is actually superior to gold and silver. Now, if you told me this 10 years ago, literally, you could have held a gun to my head. Okay, probably not that. But you could have, backed me in a corner and said, will you ever say in 10 years that Bitcoin is superior to gold and silver? And I would have said no. I would have just flat out said there's no way I would have said that. In fact, I can tell you how I would have never said that because I remember in 2015, I had a guy named Michael that was working for me and he was pushing so hard. He wanted me to get involved in Bitcoin, wanted me to get involved in XRP in particular. And eventually I did 2 years later. But at the time I was like, no, I just don't see it. And I gave him all the reasons that I couldn't see it. And he was telling me this. Back then, Michael was telling me, hey, Bitcoin's going to be more valuable than precious metals. I was like, there's no way. You're crazy. I was the crazy one. I wasn't the crazy one. I was the idiot. I couldn't see it. Okay. That's why we're making new moves today. And that's why I'm teaching this stuff. That's why I'm sharing it with you so you guys can see it. It's why we're getting involved in mining operations, why we're doing so many things to take advantage of the new infrastructure, because this is the future. Okay. But what I want you to know is philosophically, I am a fan of gold and silver from a philosophical standpoint. I'm a free market economist. I believe in sound money. I'm just a firm believer in gold and silver from a philosophical standpoint. But what's changed over the last many years is gold and silver, frankly, are not a money or a medium of exchange that people really like. And I want to kind of walk you down, history a little bit and kind of walk you down the road that we went through to get here. So here's the first thing that happened many, many years ago. People started exchanging in gold and silver. I can't tell you when it was. I don't have an exact date for when people started exchanging in gold and silver, but they did. And if you read older books or older stories like The Richest Man in Babylon, they talk about carrying gold. They talk about carrying gold in your purse. And that was the philosophy for many, many years, hundreds of years. You wanted to acquire as much gold and silver as you could. If you think about like back in biblical times, Judas betrayed Jesus for 30 pieces of silver. I mean, that's crazy, right? And if you think about 30 pieces of silver in the Bible 2,000 years ago was worth the same as 30 pieces of silver today. 1 ounce of silver then, Same value today. That is the uniqueness of precious metals and gold and silver, is it maintains its value over time. 1 ounce of gold is always worth an ounce of gold. 1 ounce of silver is always worth an ounce of silver. But here's what happened over the years. What happened is people said, my purse has gotten really fat. Like carrying all this gold, all this silver, it's kind of like becoming a burden for me. And they said, I sure wish I could put it somewhere, because people just didn't want to carry it everywhere. And it left you vulnerable. I mean, somebody robs you while you're riding your little horse and buggy down the street, and suddenly all your gold and silver's gone. So they needed a place to keep it safe and entered the banks. And what was a bank? A bank is basically a big vault. It said, hey, you're going to deposit your gold and silver here. We're going to custodial it for you. We're going to take care of it. And when you come in and you deposit some gold and silver, we're going to give you a piece of paper called a receipt. And it says, I owe you this gold and silver. I'm storing it for you. All you have to do is walk in, take this piece of paper. And that became a new way. It's like, we're going to give it to the bank to take care of it for us. Well, then people were like, it's a lot of work to go to the bank and actually get my gold and silver and carry it over to Bobby's so that we can, buy some, whatever it is they're buying, some new shoes or whatever. And they said, what if Bobby would just take my piece of paper? What if I could just give Bobby a piece of paper over here that says, hey, this is worth, X amount of gold and silver at the bank. You can just take this note back to the bank and go get your gold and silver. And Bobby's like, yeah, that'll work. It's easier. I don't want to carry gold and silver. I can fold the paper up and put it in my pocket. And that's where money came from. It was too easy. It was too easy to trade the paper. It was too easy to just simply say, Bobby, just take my paper. You don't have to carry all the gold and silver. And we left the gold and silver at the bank, and it worked. It was just a system that worked until it didn't. And then we had the demise of it, because the bankers, I don't want to blame the bankers. I don't want to say they got greedy, but let's just be honest. They probably got a little bit greedy, because what they started doing is they started saying, you know what? Larry never comes and gets his gold. I'm going to lend it out. I'm going to lend out his gold, and I'm going to make some money on it. If Larry comes to get his gold, I'll just give him, Mark's gold over here until we get the gold back for the people we loaned it to. And they started lending it out, and they started lending out more than they actually had on reserve. And something that we know as fractional reserve lending and fractional reserve banking was created. And it happened that way for decades and decades. And, banks would lend out more gold than they had on hand. And they kind of created this system, and it kind of worked until it didn't. And of course, we all know that you'd have these bank runs. We've heard about them. We haven't experienced them in our lifetime, but we've heard about these bank runs and people, big old lines of people at the bank trying to get their gold out because the banks were going broke. They overlent. And then, of course, in the 1930s, they changed everything. They revalued the price of gold and went from $19 to $35 because they'd messed up the system. Then they tried that for about 50 years. In 1971, Richard Nixon took us off the gold standard, and no longer was our paper money tied to the value of gold. And then they had to sell a story. They're like, you know what? Inflation is good. The more that we actually inflate, like that's natural for economics. And they pushed this really BS economics on us. And they told us if you just, trust us a little bit, everybody will have more money. And it kind of worked. People started seeing salaries going up. And they're like, hey, my dad only made 30 grand a year. I make 95,000 a year. I make 3 times what my parents made. But it doesn't have the same buying power. And for the most part, over the last 50 years, Americans at least have been trying to figure out, like, what's the deal with our money? Why does it feel like it doesn't go very far? Because they didn't tell us that the inflation was basically a hidden tax, and in the process, they were destroying our currency. They were totally destroying it. And I meant to bring a chart in. I just now remembering I forgot to put the slide in here, but I wanted to show you a chart of how bad the US dollar is. Actually, I can do it right now. I know what I can do. So I'm going to show you 2 charts here. One is gold. This is a chart of gold. Look at that. And I'm going to go on a weekly chart so you can really see the history. Going back to 1833, this is the price of gold. Now, what you have to understand whenever you look at this chart of the price of gold, one might think, oh, gold is just so valuable. Like it just keeps going up and up and up. But that's actually not it. Whenever you look at a price chart like this, if we were to do this in foreign currency terms, Forex, what you're really looking at is gold versus the US dollar. 1 ounce of gold is always worth an ounce of gold. It's never worth more. It's never worth less. Gold itself doesn't change value. What changes value is what you're exchanging it for. And so the way this chart reads, way back here, it reads $19 because that's what it was worth way back then. Okay. And then somewhere in here, 1930s right in here, it revalued to $35. Okay. So that meant that an ounce of gold was not worth $19. It was worth $35. You say, oh, that's great. It's worth that much more. No, it's the other way around. The US dollar is worth that much less. Okay. It took $35 to buy the same ounce of gold. Gold didn't go up more. The dollar went down in its buying power. And what you see in this chart is what used to only take $35 to buy now takes $4,077 to buy. Let me flip this. I'm going to turn this around. If we were to price this chart in US dollars instead of in gold, I said that backwards. If we were to base this in 1 ounce of gold relative to US dollars, we're going to flip it, then you're going to see what really happened to your US dollar. And so the way we're going to do this is instead of putting the quote currency as US dollars, we're going to put the quote currency as gold. So it'll be USD/gold. And we're going to do this. And of course, that didn't come up. Thanks a lot. Make me look like a fool. Maybe if I put a slash in there. I may have to just flip it for you because that's not even the right thing, whatever it's drawing in there. What I want to show you is if you flip this chart, that's what the US dollar is doing. And what is the symbol? I can't remember the symbol that they use for that. Well, crud. It was going to be like this really powerful moment where I showed you what the US dollar is really doing relative to gold. That's gold. Okay. Basically, if you flip it, that's what the US dollar looks like. That's the value of the dollar. It's just going, it's just tanked. But of course, I can't get my chart to draw like that. Why? Because I'm live and it would be like dramatic effect. It'd be really cool. Anyway, that's what it would look like. So what you're seeing in this price of gold is not that gold became worth that much more. It's that the dollar became worth that much less. That's what it's showing you. Okay. Now, where was I going with that? Come back over here. They destroyed our currency. Our currency's buying power is not anywhere what it used to be. And I think all of you kind of know that. I really do. I think most people know that. Then the movement becomes this move to sound money. And the move to sound money looks like this. You have all these silver and gold bugs that have been out there warning people for years saying, hey, the money's going down. You need to go buy real money. And everybody kind of laughed at them. But here's the truth. They were right. And you say, who was right? Both of them were right. The people that were saying we needed to get back to sound money were right. And the people who were laughing at them were right. Because here's the reality. Gold and silver are not practical. They're not practical. It's still heavy. The very thing that took us to paper currency 500 years ago is the same thing that keeps us from gold and silver today. It's not practical. It's heavy. Nobody wants to be walking around with 25 ounces of gold in their pocket. If you're wearing jeans, it's pulling your jeans down. If you're a girl and you got a dress, you ain't got nowhere to hold it. It's just not practical. No one's going to go down to your local grocery store and spend an ounce of silver, give them a 1 ounce silver round in exchange for a gallon of milk. You don't want to do it. The grocery store doesn't want you to do it. They want something practical. And that's why I finally realized and came to the conclusion, we're never going back to physical metals. It's never going to happen. And so the question then becomes, well, if we're not going back to physical metals, what can we do? Well, one solution would be just back our U.S. currency with gold and silver. Just go back to sound money that's tied to gold and silver. And that's a logical, very logical solution, one that the U.S. government should do. But believe it or not, even though philosophically that's what I agree with, there's actually challenges in doing that frankly, I don't know if society could handle. For example, the amount of lending that somebody can get today. You know, an average person can go to a bank, and if they've got a decent credit history, they can go get a loan for $500,000 to buy a house. Part of that is because we don't have a gold standard. They'll give loans to anybody. But that means that anybody can get a house. And then they can find a way to pay it back over time. And the term for that is elasticity. The money supply is elastic. It can expand and it can contract. And that is actually a benefit of fiat currency. Agree with it or hate it, that is a benefit, one that our society is very, very comfortable with now. One that I don't know that we can unravel in terms of our society. Will our society, would they be willing to go back to a non-elastic currency? Would they be willing to go back to not being able to get loans because we just didn't have enough money to do it? I kind of think the answer is no. So I think there's a lot of challenges in a nation state going to a full gold-backed currency today. Even though philosophically I agree with it, I think that sociologically, is that the right term? Society may have a problem with it. But then you enter Bitcoin. And what did Bitcoin do? It's digital. It's easy to transfer. It's a piece of cake to carry. I can carry it on my phone. I could carry billions of dollars I could literally have billions of dollars of Bitcoin on my phone. If you want to carry billions of dollars of gold, you're going to need a semi-truck. Nobody wants to drive around with a semi-truck full of gold. The cost of preserving the gold, if you had a $1 billion, okay, I know some of you are like, I don't want $1 billion. You do want it, you just don't want to admit it. So let's say you had $1 million. If you had $1 million worth of gold, it's still, you don't want it. Like you do, you just don't want to take care of it. You'd be like, oh, this gold, I got to lug it around everywhere. Then you have to have an armored truck to protect it. And you say, I don't want to protect it. I need a vault. So you have to build a big vault in your house to protect your gold or your silver or copper, whatever it is. And it becomes like a nuisance. It's a pain in the butt to protect your value. It's difficult. It's heavy. It's cumbersome. Not so with Bitcoin. You can have all of the Bitcoin that you own on your phone, on a little drive that you can connect to a computer, a little ledger wallet, a little Trezor. Or now this company out of Texas, I forget the name of the coin, but they've made these coins that look like a physical Bitcoin, and it's got a QR code, and that is your cold storage wallet. You can carry one single coin and have literally as much Bitcoin on there as you want. Incredible. But here's the cool thing. It's scarce. It's scarce and it has value. In fact, it's more scarce than gold. You realize we keep mining more gold. You can build a new gold mine. Go find you some gold in the ground. Find you some investors, get all the equipment, spend the effort and the energy to mine the gold. You get it out of the ground. We expanded our gold supply. You cannot expand the Bitcoin supply. When the 21 million are gone, they're gone. All you can do is trade it. You can't get more than the 21 million. It's limited. Here's the best part. If you want to go to Kroger or Publix or whatever your local grocery store is, and you want to buy a gallon of milk, and if you had silver, you would have to shave off your silver and weigh it out to pay, the fair market price of $3 or $4 for a gallon of milk in silver. It's hard to denominate silver. It's hard to denominate gold. It's easy to denominate Bitcoin. Right now, any of you that want to, you say, hey, I just want to pick up $5 worth of Bitcoin. You can do it. You just get a little bit of, 0.00000001 Bitcoin. And it's easy to denominate because it can go out 9 zeros after the decimal point. And here's the best part. The government cannot come in and print more Bitcoin and devalue it. There's no inflation mechanism. There's only a deflation mechanism. The more that it's out there and in circulation, the less there is, and the higher the demand and the higher the value. And the government can't do anything about it. All these people that are out there saying the CIA created Bitcoin to suck you in to a central bank digital currency, they don't get it. The government wouldn't do that. That is their death wish. Bitcoin is the solution. The philosophy of Bitcoin is the antithesis of central banking. It is the kryptonite to central banks. They have fought it tooth and nail. They put idiots like Gary Gensler at the SEC to try to take it down, and they can't win. They can't. which is why finally 15 years later they're trying to join it, because they can't beat it. And here's the best part. It's autonomous and it's decentralized. Autonomous and decentralized. You cannot say that about any other currency in the world. And relatively speaking, it is cheap to transfer and it is cheap to protect. If I had $1 million worth of Bitcoin and I wanted to move it from Nashville, Tennessee, where I live, and I wanted to take it to you, wherever you live. I don't care where you live. You might live in Florida. You might live in Canada. You might live in New York City. You might live in LA. It doesn't matter. Wherever you live, if I wanted to transfer it across town, it's hard. If I want to transfer $1 million worth of gold across town, what would I have to do? Well, first of all, I'd have to figure out exactly how many pieces of gold it is, because I can't even tell you right now. But I could probably stick it in my truck if I had to. Let's be honest. $1 million's not that much when it comes to gold. So let's say $1 million worth of silver. Okay, you got a bunch of silver coins, and you want to transfer it from point A to point B. Well, what's the risk? The risk is I pull up at a stoplight and some thug decides to pull a gun on me and rob me. They take my vehicle. So I need an armored truck, and then I need security for my armored truck. And I got to move it from point A to point B, even if it's a close move or a distance move. It's a lot of work. And that's just locally here in the United States. What if you want to transfer $500 million worth of silver or gold from New York City to London? We got to protect it, number one. We got to get, airplanes or big ships that are protected, move it all the way to the other side of the world. It's hard. It's hard. Not so with Bitcoin. With Bitcoin, last week, I did a transfer with somebody, almost 5 figures. He was in the mountains of Virginia. I was in Nashville, Tennessee. It took us less than 12 seconds. It's on its way. Insane, right? Insane. That's why I say Bitcoin's better than gold. Big players are hodling Bitcoin. Big players are hodling Bitcoin. You got people like Michael Saylor. Michael Saylor has nearly 650,000 Bitcoin inside of their business, their organization, MicroStrategy. In fact, it's kind of becoming a problem. He's becoming his own worst enemy here to some degree, because if he wants to liquidate his 650,000 Bitcoin, he's going to move the market. But here's the deal. If you understand Michael Saylor's philosophy, he's never liquidating his Bitcoin. Never. He has said that. He's not just a hodler. He believes so strongly in the limited supply of Bitcoin that he looks at it and he says, never, ever, ever, ever sell the family Bitcoin. And there's a reason for that. Because in Michael Saylor's model of the world, the way that he handles his finance, he doesn't sell the Bitcoin to benefit from the Bitcoin. He takes a loan against the Bitcoin, same way that real estate developers have done for decades. Instead of selling the underlying asset, you just simply borrow against it and then pay it back with your profits. It's easy. So you get the benefit of owning this underlying asset that you don't actually have to sell. That's why Michael Saylor's hoarding, literally hoarding Bitcoin. But it's not just Michael Saylor. The U.S. government now has around 200,000 Bitcoin. And if you look at the Bitcoin Act that Cynthia Loomis is pushing out, they're talking about buying up 100,000 Bitcoin per year for at least the next 5 or 10 years. I think it was 10 years. The end result was to have at least 1 million Bitcoin. At least 1 million. If the U.S. government had 1 million Bitcoin in the U.S. Treasury, guess what that does? One wallet, one Bitcoin holder would control almost 5% of the Bitcoin supply. Between the U.S. government and Michael Saylor, you're getting close to 8, 9, almost 10% of the total Bitcoin supply with 2 people. What does that do? Well, it gives them probably too much power, number one, but more importantly, it sucks up the supply. Imagine if Michael Saylor were to get up to 1 million Bitcoin, which he would like to do. And if the U.S. government had 1 million Bitcoin, now we no longer have 21 million in circulation. We're down to 19 million. 19. Can you imagine? What does that do for the value? When you look at how the Bitcoins are allocated right now, take a look at this. Exchange traded funds make up the largest allocation of Bitcoin holdings, all of the ETFs and funds together. Then you look at publicly traded companies that have been investing in Bitcoin. Look at that. More than half of the available Bitcoin is held by funds and institutions that don't have a big reason to sell. You see that? Then you look at the governments. The U.S. government's a big player, but relatively speaking, a small player. You got El Salvador. You got all these governments around the world that are buying Bitcoin for the treasury. Then you get into the private companies. Then you get into the smart contracts and kind of the, Bitcoin for utility. And then this little small sliver of purple, that's the exchanges and the custodial accounts. You and me, the people like us that are just buying a little bit of Bitcoin and trying to ride the wave a little bit, we're that little purple. Now, why am I saying that? Why do I make a big deal about that? This is actually an extraordinary graph. You really need to understand this. We're not fighting over 21 million Bitcoin. There's probably maybe a couple million that fit into that. It's probably not even that many. Let that sink in. Like the average everyday Joe, the average everyday Jeremy, we're fighting over this really small sliver of Bitcoin. The funds aren't liquidating. The public companies aren't liquidating. The governments aren't liquidating. The private companies aren't liquidating. Some of them might. The smart contracts, there's a constant liquidation and buying that's going on there. That's just kind of a cash flow thing. And then you got this little sliver of purple. That's the yous and the me's of the world. You see why Michael Saylor says, yeah, $1 million Bitcoin is realistic? $10 million Bitcoin is realistic? Because you have the most powerful financial players in the world now that are hoarding after as big of a chunk of the pie as possible. That's why I say I think Bitcoin's more valuable than gold. Gold is not really going up in value. It kind of is, but it's not. What's happening is the US dollar is going down in value, but you can't say the same thing about Bitcoin. 1 ounce of gold 1,000 years ago traded for an ounce of gold today. They're the same. But that's not the truth with Bitcoin. With Bitcoin, 1 Bitcoin from 15 years ago is not the same as 1 Bitcoin today. The demand for Bitcoin has just taken off. You have the largest financial players in the world that are hoarding after the same 21 million chunk of pie. That's a story. That's called demand. And that's why I say if gold was the store of value for the ancient world, Bitcoin is the store of value for the digital world. Or shall we just say Bitcoin is gold 2.0. I think if you're going to get in the game of Bitcoin, not the game of crypto, but if you're going to get in the game of Bitcoin, I think Michael Saylor's got the right philosophy. Never sell the family Bitcoin. Hoard as much of it as you can get and never sell the family Bitcoin. And when it dips down like it has the last few weeks, you get as much as you can. Just tune out the naysayers. They don't really understand the big picture. When you see billions of dollars of funds, talking about the institutional funds, flooding into Bitcoin. I'll put this picture back up here. When you see billions of dollars of exchange traded fund money or investment funds flooding into Bitcoin, when you see public companies flooding into Bitcoin, when you see governments flooding into Bitcoin, you realize the more of the little bit of Bitcoin I can get, the more that the biggest players in the world want of what I have. That's called demand, folks. That is called demand. And Nothing else matches it. Not even gold, at least today. Let me know what you think. Give me some comments here. Let's have that conversation. For our final segment today, getting into Crypto Alpha, talking a little bit about analysis, I want to share with you my 5 disciplines of trade analysis. I hope I have time. I'm learning a little bit about the timing of some of these segments. I think a segment's going to take 10 minutes, takes 25 minutes. Next thing I know, I don't have enough time. But let's roll through our 5 disciplines of trade analysis, and if we have to come back tomorrow, we'll come back tomorrow. But let's get started right here. Understand, using these techniques, you can analyze any stock, any futures or Forex trade, any crypto trade in less than 5 minutes, and you can know that your analysis is right. Most people do not fail to pick winning crypto trades because they, picked a crypto that sucked. They did it because they didn't understand the timing. They didn't understand the dynamic. They didn't understand the opportunity. And so they end up getting in when the euphoria is high. They end up selling when the panic is high. They get in too high of a price. They get out too low of a price. And they're always on the wrong side of the trade. So whenever I teach trading, I teach everything can be broken down to these 3 steps. Number 1, you got to analyze the trade. And analysis is as simple as picking the right trading direction. Pick the direction that the trade is moving. Step 2 is we apply an appropriate strategy. Now, when we're dealing with stocks and options and we're dealing with futures, the strategy becomes a little bit more strategic. When you're looking at something like cryptocurrency, it's pretty straightforward. You buy when it's low and you sell when it's high. And if it's going down, you sit out. That's the strategy. Just sit on the sideline. Not a lot of short selling in crypto. Now with perp trades, it's perpetual futures, and all this stuff coming into crypto, I would say in the next 2 to 5 years, we're going to see, hopefully even in the United States, we'll see more derivatives trading on crypto. And that will open up the strategic playbook a lot. But for now, the strategic playbook is buy when it's low and sell when it's high. That's the strategic playbook as it looks for crypto, okay? The third step in trading for profit is simply risk management. And if you don't learn to manage your risks, then you're going to be losing money constantly. And that's just all there is to it. So I want to break this down a little bit. I'm not going to look at number 2 and number 3 because that would take us forever. But I am going to go through at a high level the 5 steps of trade analysis that I go through with every trade. And when you learn how to do this, it takes less than 5 minutes. And I do this every Sunday night with my Profit Picks group over at Trade Maestro. And you can learn to do it too. And what you need to understand about analysis is analysis has one outcome. And that outcome is simple: to determine the direction of the trade. Is the crypto trade going up? Is it going down, or is it stuck going sideways? Whenever I start a session here every day, we start our live stream and I look at charts. Why? Because I'm doing analysis. Why? Because it's telling us the direction of the trade. When we look at this chart right here, this is how we analyze what's going on. And now I'm going to give you the process that I look at. So, one outcome, determine the direction of the trade. There's one primary question. How do I pick a winning stock? How do I pick a winning crypto? How do I pick a winning futures? How do I pick a winning Forex trade? And the answer is you don't. You don't pick a winning stock or a winning crypto or a winning futures, any of that. All of them are winners. What you do is you learn to identify opportunities. That is the answer. You learn to identify opportunities. And I do it with these 5 disciplines. What I call the 5 disciplines of trade analysis. So number 1 is support and resistance. Now I talked about this last week. If you missed that, you can go back and look at the recordings of that. But support and resistance identifies the framework of the trade. It tells us what price the trade should or should not be trading at. Or something sometimes I refer to as the trading matrix. It's the grid, where the buyers show up, where the sellers show up, and the price movement in the middle. That is only going to be identified by identifying your support and resistance area. And when you can identify your support and resistance, you now have the framework. The metaphor that I use for this is if you think about somebody that's building a house. You lay the foundation, then the next thing they do is they go and they put up all the walls, right? Now, it's not finished. You know, if you just look at a house that has a foundation, just a big old concrete slab, and you just like, hey, the kitchen's going to go over here, and this is going to be a bedroom. You know, you bring your friends, and they're like, yeah, I see that, yeah. Right? But then, you know, after a little bit, they have all the studs up, and they got all these wood framing, that's what they call it. They call it the frame of all the walls. And as they put the wood together, 16 inches apart, you can see through all the walls. I mean, it's not like you got a house put together, but you have the framework in place. You have the structure. And now you can bring your friends through and you're like, hey, look, the kitchen's going to go over here. And they're like, oh, yeah, I can kind of see that. Okay, maybe, yeah. If you really stretch your imagination, this little tiny space is going to be the bathroom. They're like, oh, yeah, about all you can fit in there is a toilet. Okay. And they kind of get the idea because you have a framework. Now, nobody would want to move into that house. You get rained on, you get wet. You know, the wind blows the water through the walls. It's not a house, but it's framework. And that's what support and resistance is. Support and resistance is not a final analysis. It's a framework that gives you a structure to your trade. The next piece is what I consider actually probably the most profitable part of the analysis. I always say if you can do support and resistance and step 2, which is your trend analysis, you're 80% of the way there. You've done the 20% of the work that gets you 80% of the way there. And these are your 2 most important pieces. Structure, your support and resistance, and the trend. What the trend does, you may have heard it said, the trend is your friend. It identifies major momentum in a trade. If you can buy a crypto or you can buy a stock or anything else that you're trading and you're buying with momentum, it's like getting on a freight train that's moving 1,000,000 miles an hour. Like you're just going. That is the challenge of every trader, to buy into a trade that has momentum. How many of you have ever bought a crypto trade or maybe been thinking about it and it looked like it was really, really high and it looked like everybody was excited about it? You get into it and it just stalls out and nothing happens. Or it goes back down and just stalls out. Nobody wants to be in a trade that stalls out and doesn't go anywhere. That's what momentum is the opposite of. The momentum is getting into trades that are moving and moving quickly so that you're actually in a position where you can make profit. Whenever you think about the trend, I believe that you should only trade with the trend. Now, in crypto, I don't run into this with people. I don't have a lot of people that are trying to short crypto and trade the pullbacks, and I don't get that. But when I'm dealing with people that are trading stocks or options or futures or Forex, literally any market except for crypto at this point, they're trying to trade the counter trend moves, and that's a losing battle. You don't want to do that. You want to trade with the primary trend in the direction of the trend. That's how you trade the trend. You say, well, how do you know that? And I'm going to give you the answer. Use your moving averages. I can't remember. I think I did a session on this last week, or at least touched on it last week, but I'll do a more in-depth session in the future. Moving averages, in my opinion, are the most valuable indicator that you can use because they literally will identify the trend for you. And if you use the moving averages that I created in TradingView, which I give you for free at Trade Maestro, it literally color codes it. It's red and green. When it's red, you stay out. When it's green, you go with it. I mean, you can't get any easier than that. And if you just do those 2 pieces right there, if you just have the structural analysis with your support and resistance, and if you just have your trend analysis with your moving averages, you're going to win probably 70 to 80% of your trades just like that. And in the world of crypto, I think it's even higher because, well, we won't get into that, but it ends up being even higher. There's just a bias in that direction, so it tends to work. So those are the 2 most important pieces of trade analysis. Now, the third discipline is what we refer to as chart patterns. And chart patterns are little patterns of trading behavior that show up. You've heard me talk about this if you've been listening to many of these live streams. You've heard me talk about how trading behavior, that is the people that are the ones buying and selling the crypto, trading behavior is the real momentum or the real driving factor of price. Okay, so it's how people feel about it. And when you see a chart pattern, what you're seeing is you're seeing in the price action of the chart the way that people feel about it. So if people are really excited about it, you're going to see the price really rising really quickly. If people are afraid of it, if they're pretty bearish on it, they're afraid it's going to go down in value, you're going to see the price action falling. And if people are kind of in an agreement, they're like, yeah, this is probably pretty fair. You got buyers and sellers matched, then the price is going to stall out. And inside each of those phases of the trend, little patterns of trading behavior show up. Some of them are tiny, what we call a continuation pattern, and it might only take 3 to 8, maybe 10 or 12 trading days for that to show up. Other patterns are going to take 2 or 3 months to show up, and you might start to see what we would call a topping pattern or a bottoming pattern that terminates the previous trend. Then there's other patterns that take months to develop, and consolidation patterns can do that. Just take months and months. Then there's patterns like a triangle and patterns like wedges and all these different patterns that have sentiment indications. And when you learn to identify, and what it does is it helps you anticipate future moves. And the reason it helps you anticipate future moves is because these patterns actually have meaning. Nobody thinks that they're doing it. Nobody's like sitting here saying, oh, let's go collectively create a wedge. Nobody wakes up and says that. Instead, what you're seeing is you're seeing the collective behavior of society forming this pattern. And as that pattern forms, eventually society has to break in one way or the other. And I've been doing this now I've been trading for 21 years. I've been teaching it for 16 years. I'm still fascinated at how on an unconscious level this all takes place. But it happens. And it happens just every stinking day in the market, over and over and over. And so the reason we identify patterns is because, number one, helps us anticipate future trading behavior, but more importantly, it tells us when trends are ending, it tells us when trends are continuing, and it tells us when trends are beginning and reversing. And there's only about 8 or 10 patterns that really, really matter, but when you can learn to identify those 8 or 10 patterns and you can see them very clearly, boom, it's like having insider trading insight. You look at it and you're like, oh, look at that. And you can brag about it. You can tell your friends, oh, look at this pattern. I see this is happening. And they'll be like, you don't know what you're talking about. And you'll be like, oh, do I? And then before you know it, stuff starts to play out. And they're like, how did you know? How did you know? You're like, because I learned to identify patterns. One of the third of the 5 trading disciplines or trade analysis disciplines. All right, number 4 is candlestick patterns. Now, I talked about this yesterday. I introduced you to candlesticks, but candlesticks are like a fine-tuning entry and exit for your trading. Okay, if we think about chart patterns are a little bit more bigger picture. They're going to take, in some cases, a few days to form, in many cases, weeks or months to form. And so it's a much bigger story that you're getting in terms of trading sentiment when you're looking at a chart pattern. When you're looking at a candlestick pattern, they happen every day. And if you're looking at like a 5-minute chart or a 1-hour chart, they're going to happen every 5 minutes, every 1 hour. You're going to see new insight that's being revealed through these candlesticks. So if chart patterns are a big picture sentiment indicator, candlestick patterns are a fine-tuned sentiment indicator. And what it helps us understand is when the swing is turning. It gives us insight into when the swing is changing, when the momentum is changing and the swing is turning. And it gives us instant feedback to trader sentiment. That fast right there, that fast. People say they need to only trade the fundamentals. They don't understand what they're talking about. Fundamentals take too long to analyze. Fundamentals don't even make sense half the time. And more importantly, the market doesn't know which fundamentals matter. So the market does what it wants to do. That's why I don't even look at fundamentals. They don't matter. By the time you figure it out, it's too late. But candlesticks give us literally minute by minute, hour by hour, updated information about what's happening with that trade right now in this moment. And you can make trading decisions that will be profitable trading decisions simply by learning to analyze and understand the patterns that are happening with candlesticks. Unbelievable tool that we've got. It gives us a story. It tells us a story of how the traders are feeling about that trade in the moment. And so when you stack these 4 together, when you look at your support and resistance structure, when you look at your trend analysis, then you add in sentiment indications like chart patterns, and you get really great insight with things like your candlestick patterns. 1, 2, 3, 4, you're starting to build the argument of the direction that this trade is most likely to go. And now we're not just making educated guesses, we're actually doing informed, analytical assessments of where this trade is and when it starts to move. And then there's one last piece in the 5 disciplines of trade analysis. There's one last piece, and that is your indicators. Now, a lot of people think that indicators are the most important thing. They're like, where's that special indicator that you had? They say, if there's just one indicator you can look at, what would it be? Which indicator tells you the perfect timing for the market? And the answer is none of them. None of them. Because if you're looking for that one special indicator, you actually missed the actual story of what indicators do. There's 2 functions of what indicators do. Number 1, they confirm what you already knew. Now, Where'd you get that information? From step 1 through 4. When you did your support and resistance, when you did your trend analysis, when you did your chart pattern analysis and your candlestick analysis, you have a bias at that point. You have a pretty good idea this is where things are going. And so for the most part, when you look at a technical indicator, more often than not, it's going to say, yep, see, look at that. There's a confirmation. But sometimes it's not. Sometimes the story is different. You do all your other 4 steps, and then you get to your indicators, and instead of telling you what you thought you already knew, it says, uh-oh, this is an alert, red alert. It's not what you thought. It's an alert that something you didn't see is happening under the hood. The metaphor I use for this is the gauges in your car. Certain gauges are pretty easy to read. And like your speedometer, it tells you how fast you're going. And your odometer, if you want to read that, it tells you how many miles you've gone. You look at something like your gas gauge, and most of the time, you're driving along and you look at your gas, you're like, yeah, everything's good. But sometimes you look at your gas gauge and it says you're getting close to empty. Now that's like, okay, that's an alert. That's warning you that you're going to run out of gas soon. It's not a crisis. It's just an alert. It's like, somewhere in the next 30 miles, pull over, get yourself some gas. But there's a couple indicators in your car that never come on, such as your temperature light. But if they do come on, it's a crisis, right? More often than not, you look at the gauges in your car and, you never see that temperature light or that thermostat gauge going anywhere. But every once in a while, boom, it's like pegging hot. And that light starts flashing, car's overheating. Do you want to just, casually make it to the next exit? No, you want to pull over immediately because your engine's overheating and it could melt down. It's a crisis. Technical indicators in the market are the same way. Most of the time, they just confirm what we already knew. People are looking for some magical signal. Most of the time, technical indicators just confirm what you already knew. Every once in a while, they alert you to something you couldn't see. And sometimes those are just a soft warning, like a gas gauge, like, hey, pretty soon this is going to change. Or sometimes it's like a red alert. It's like, whoa, this is happening right now. Pay attention. The reason it's valuable for us is it gives us confidence in our analysis. It confirmed what we knew, or it revealed something we just couldn't see. And when you go through all 5 of these disciplines, you can look at any trade. You can look at any trade, and once you learn them, it takes a little bit to learn them, but once you learn them, you can do it fast. I mean, it doesn't take hours and hours to analyze. In fact, if you come to one of my Profit Picks classes on a Sunday night, I will literally go through 30 or more tickers, and I'll do it in an hour and a half. Sometimes I spend too much time talking about the market overview, and I have like 45 minutes to go through 25 trades, and I'll do them. I will analyze them and do a market setup, a trade setup that I believe in. And I can do it that fast because I've done it now for, all these years. But my students, they do it too. And they know what to look at. Because once you learn the disciplines, once you understand what you're looking at, it takes hardly any time to look at something very quickly and say, yeah, this is a good trade, or no, it's not a good trade. This is a good trade. This isn't a good trade. And the sooner you learn to do that, the more confidence you'll have with your trades. You'll be able to stick with it longer. You'll stop staring at the screen wondering if you did a good job. You'll stop looking up news headlines wondering if you picked a good trade. You'll stop asking people, should I buy XRP? What do you think of Bitcoin? Should we be buying that? You'll stop those questions because you'll be able to trust yourself, and you'll have the intuition to say, you know what? I know what I'm doing. In fact, I trust me more than I trust what I see on TV. I trust me more than what I see in the news headlines. And when you get there, you're making that shift from someone who likes to dabble in the market to someone who can master it. And of course, that's what I want for you. It's what I want for everybody. So these are the 5 disciplines of trade analysis. If you learn them, they will transform the way that you choose trades, and they will empower you, and you will be able to trade with confidence. If you want to learn more about that, obviously check me out over at trademaestro.com. Check us out over at trademaestro.com. If you haven't done so already, please like and subscribe. Follow us here on Rumble, on YouTube, or wherever you might be watching. But over on Rumble, it's Trade Maestro. It's same thing over at YouTube, youtube.com/@trademaestro. We've got a Telegram page. I need to be getting some more videos up there. I haven't done a good job posting those, but we got a Telegram page, Real Trade Maestro. And over on Facebook, same thing, Trade Maestro Official. I'll be back tomorrow. I know I went a little bit over today. That's not my plan. I try not to do that, but yeah, just it took an extra 4 minutes. So hope you guys got some great stuff out of it. Let me know what you think. Leave me some comments. Send me an email if you want to. I wish you the best. Until next time, happy trading to all of you. Have a great day. We'll see you tomorrow.